In today's video, I am going to talk to you about how to convert an S Corp to an LLC. So you probably clicked on this video because you want to learn how to convert an S corporation to an LLC. Hey, I'm Andrew from Walai Law, where we help entrepreneurs just like you start your businesses without dealing with the complicated legal forms. Our done-for-you service is backed by over 2,050 5-star Google reviews, and we can help you start your business too. I am a recent law school graduate. I am currently awaiting my bar results, and in the meantime, I'm helping entrepreneurs just like you start your businesses too. So let's go ahead and talk about what you want to be mindful of when deciding to convert an S Corp to an LLC. There are tax consequences of converting an S Corp to an LLC. There are some tax consequences of converting S Corp to LLC, and it is important that you are aware of such tax implications before converting your S Corp to an LLC. Both S Corps and LLCs, limited liability companies, offer limited liability. Other advantages of LLCs are that they offer flexibility in terms of the company's operations, little formalities, and additional options for managing and oversight of the business. Therefore, there are many S Corps that wish to convert to an LLC for such benefits. Another reason for converting from an S Corp to an LLC is due to the fact that LLCs can be treated as a partnership for federal tax purposes. Being treated as a partnership for tax reasons provides enhanced flexibility over the tax rules for corporations. Both LLCs and S Corps are treated as pass-through entities for tax purposes. This means that any income, deductions, and tax credits are passed through to the owners of the business, and therefore are filed on those owners' individual tax returns. There is also no corporate tax return that must be filed for an LLC or S Corp. For this reason, these two types of business structures avoid the issue of double taxation. C Corps are subject to double taxation, as these corporations are first taxed at the corporate level, and then if the company passes on additional profit to the shareholders in the form of dividends, those dividends would have to be reported on those shareholders' personal tax returns. So, how to convert from an S Corp to an LLC. Before you choose to convert your business structure, you should always think of all of the consequences of such a conversion. While there could be many benefits, there are usually some consequences too. You'll probably have to liquidate your S Corp, which will then be recognized as a gain under Section 336, as if it sold all of its assets. If the Corp's assets have increased between the time of formation of the business and the time of conversion to an LLC, a capital gain is realized. This means that the shareholders must pay capital gains tax on the amount of that gain. With that being said, you might still want to convert your business structure, particularly in the following circumstances. The S Corp wants to create a liability shield. In most states, LLC members are shielded from creditors under what are called charging order statutes. Again, that's charging order statutes. The S Corp wants to liquidate assets ahead of time. While the S Corp is required to liquidate assets when converting to an LLC, this is also the main tax consequence. It could also be viewed as a benefit to an S Corp that continues to grow exponentially. Therefore, the S Corp might want to convert, while the tax consequences of such liquidation would be lower than at a later point, when the tax would continue to grow based on the amount of assets being liquidated. If the S Corp brings in a new investor, this will cause the termination of the selected Corp, which will result in tax implications. For that reason, the S Corp may want to convert to an LLC before choosing an additional investor. Some S Corps want to convert to an LLC, but still be taxed as an S Corp. There are two ways to do this. The first is to create an LLC and subsequently convert the corporation into the LLC. The corporation will then be referred to as an LLC, and the corporation's assets will transfer to the new LLC. The second way is to merge the corporation into an existing LLC that already has assets. When a corporation has assets with built-in appreciation, the conversion to an LLC can still allow that corporation to be taxed as an S Corp, but operate as an LLC. The only issue you might face would be whether or not the conversion increases income tax, as you are now transferring over assets from the corporation into an LLC that also has profits of its own. So in determining whether or not converting an S Corp to an LLC will benefit you, it all depends on your situation. I do advise that you speak with a professional in order to determine whether or not such a conversion would be beneficial to you. Again, there are certain things that you're going to want to be mindful of, but in the end, converting your S Corp to an LLC may provide you with great benefits. An LLC is one of the simplest business entities and structures to operate and manage. So, based on your business, based on how many members you have, based on whether you have investors, you may want to decide to convert your S Corp to an LLC. If you happen to have any questions about anything I talked about in today's video, click the link in the description box below to schedule your free consultation with a professional who can help determine whether or not an S Corp or an LLC is best for you. If you haven't already, please make sure you hit the like and subscribe button so you don't miss out on any future videos. It's time to invest in yourself. It's time to rise.